What's up, guys? How's everything going? Kunal here, Bulls on Wall Street. Guys, I am excited to bring you our next deadly trading sin. We've gotten 4 done already. Today, we're going to talk about number 5. Now, of course, we're going to be doing these all in extreme detail in our next webinar, which is actually tonight. And I'm looking forward to seeing a lot of you guys there so that we can really hone in on these kind of things that, frankly, all traders go through, new and experienced. So let anybody tell you they're not. The only difference between a professional trader and somebody that's just starting out or struggling is that the professional trader recognizes these and has a plan of action for each one of these and is aware when it's happening. I still go through all of these deadly sins, but the key is to be aware of it and then really quickly pivot when you start to see it. Let's talk about trading sin number 5, FOMO, fear of missing out, right? Fear of missing out is always going to be that hyperactive thing that really just tugs at your heart when you're trading. When you see a stock that just starts moving around like crazy, it just explodes out of nowhere. It's that anxiety that you are going to miss this once in a lifetime opportunity. And anytime you see something hot, guys, it always seems like this is the stock that's going to make your account. This is the stock that's going to make your life or your week. It always seems like that. It's a psychological tendency to chase. Look, in trading, chasing is bad. You chase, you die. You chase, you're chasing after unicorns. Trading FOMO symptoms. You're buying at highs, right? Anytime, guys, if you think that trading is about drawing a squiggly horizontal line at the high of day and then thinking that's a breakout, you're wrong. You got to start all over in trading. High of days is just that. High of days has nothing to do with breakout. You know those high-low scanners you see on like Dash Trader and all that stuff? Not going to do you any good. It's cool to just see like what's hitting high of days, I guess, but it has nothing to do with breakouts. Once you see something at highs, it's already too late. You buy high, you die. You chase, you die. You chase, it's like chasing unicorns, baby. You don't want to do it. Other trading FOMO symptoms. People in the chat room, right? They're talking about this hot stock. Always there's a hot stock going on in your chat room, right? Especially if you're in some penny popper chat room. Well, then everything is hot, right? Everything is the next big deal. Usually by time people, if you're not focusing on it and catching in the beginning move, by time it starts to move, it's already too late, right? And then everybody starts talking about it and it becomes like, right, it takes over the chat room. And now you're thinking like, man, am I the only one that's not in this thing? Like, is that what's happening? And that's when, you really are prone to chase and get into just making bad mistakes. Oftentimes when you chase too, right, you end up taking a little bit excessive risk because if you buy it too high, your stop loss starts to go under support. So your risk is high. So most of the people just chase without a stop loss because they know they're chasing, right? And of course, they only think it's going to go up. But the fear of missing out is even more powerful than the fear of losing. And that can really get us, right? You start resorting to market orders that chase the entry. Anytime I start whipping market orders, I know like I'm desperate, right? If I start just jamming market order buttons, that's usually a telltale sign for me to take a break, right? Take the day off, take an hour off, just do something. Guys, this just boils down to, right, FOMOs, you're chasing that entry, right? In terms of what your risk is on a trade, right, your risk is just from where you buy to where your stop loss is. So the higher the entry, the higher the risk. If you chase your entries, guys, your win rates tend to drop because what do stocks do after they run for 3, 4, 5 candles, on your intraday chart? They drop back, they retrace. So what often happens is you buy it high and then you get stuck in the retracement. So then you sell it, and you sell it on support, and then what happens? It goes back up, and then you chase it, and then it comes back down, and you just stuck in that spin cycle of despair. You know that lonely spin cycle. Yeah, you just chasing. Then at night you're watching that Netflix, eating that ice cream, thinking about why you shouldn't chase, that you're not going to do it anymore. So when you chase your entries, you take more losses, you shake it out faster, you're more emotionally tied to the trade, and by reacting based off your entry, man, that's when it really, really goes. I was just thinking about this in our chat room the other day. Everybody was talking about like this Adil all day. He's like our little small cap guru. He was trading this, and you know what? He had been talking about all damn morning for like an hour, and I hadn't even been really looking at it. And everybody's like, oh, man, it's taking so long. And I wasn't even thinking about it. Next thing you know, this thing gets an MPC going, right? And everybody's like, oh, shit, it's breaking 3. Like, it's exploding. We're up, 10, 15, 20%. And I'm like sitting there like, well, it's not that far from the breakout, right? Like, oh, like maybe it's got more room. But I had to say no. No means no, right? And man, as this thing started to go up, and you know what happens sometimes? Like, man, I was sitting there as it's going up to 30, 330, 340, 350. I'm thinking, fuck, I should have just chased it. Right? Because the one time it maybe would have worked, but then guess what happens, right? If you end up getting it too high, next thing you know, in one candle, so this will get near 4, in a couple minutes, it gets all the way back down to 320, and then right in a few more minutes, you're back down all the way to 3. And, that's the thing with, FOMO and chasing is like, see, like if you keep trying to chase it up high, they just come right back down. You can't do that, right? Especially when you're trading fast moving stocks. I very rarely trade small caps now. I still do it if I see a hot one, because in the end, right, money's money. But this is one of the things that used to happen to me more often when I was trading, $1 or $2 stocks. Doesn't happen as often when you're trading, $20 stocks. Even though the ranges are really similar on this. So solutions to this: only trade your watch list. Really think of ranges where you could enter trade. Always think about patterns. A pattern is a list of conditions that must trigger before a trade is taken. It's just like a checklist, right? When you're working off a trade, do I got daily chart? Check. What's the volume like? Check. Where are my moving averages? Check. Am I aligning on multiple time frames? Check, right? How's the intraday volume? Check. What are the market conditions? Check. What's my catalyst? Check, right? That's your trading checklist in a nutshell, minus a handful of things. So that's where you need to go with this thing. And then, of course, use limit orders. Try to get filled on the bids on stuff. That's going to really just help you a little bit, because in general, that'll prevent you from chasing. We'll talk a little bit about that in the webinar tonight. So, guys, I hope that helps. See everybody in class tonight, and I hope you all had a great weekend. Feel free to leave me any comments or concerns or whatever else you guys want to do. Adios, muchachos. Take care. Peace in the Middle East. All that good stuff.